Hey, welcome to a new accounting session. So far we have covered how postings are done from a journal to a ledger. But are we sure that whatever we have done so far is true and correct? Not sure. There may always be some clerical or human errors. We can check this internally by going back to source documents and verifying each and everything that we have done. Once it is correct from our end, how do we double check? We have to check and reconcile with a third party because there may be a mistake in internal evidence. Let me tell you some problems that our friend Daniel faced this month with his bank-related records even when he checked all his internal evidences. He was checking his bank ledger account and he remembered that he was to receive a certain amount from a customer. But it has still not been received. So he called this customer and reminded him for payment. But he said they had already deposited the amount in Daniel's bank account. He also saw that in his ledger, he had paid Mr. B some amount, but Mr. B said that he had still not received this amount. Another problem he faced was he was going to receive an interest on his fixed deposit, but he was not sure if it has already come into his bank account or not. So what do you think is this problem? Daniel had not confirmed his records with the external party, that is the bank, to see if the money had really come into his account or deducted from his account. So like we get external confirmation from debtors and creditors to reconcile balances with them, in a similar manner, we also need to reconcile our records with the bank. And to check such transactions, a bank needs to send its customers a regularly updated statement showing how his bank account stands in their books. This statement is called as the passbook or the bank statement. If Daniel would have compared his bank account in his ledger or his bank subsidiary book to the bank passbook, he would have found out exactly how much amount has the bank debited or credited. This bank ledger or bank book is bank account in our books of account, whereas the bank passbook or a bank statement is nothing but our account in the books of bank. These two books generally show a difference in amounts even if there is no mistake, just because of processing time or sometimes because no intimation is given from the bank, and sometimes because of errors and omissions. These delays usually do not matter as sooner or later entries are made both by the bank and by the business. So ideally, a bank book and a passbook should be like a mirror image reflecting all the entries in both the books. But like we said, they both will not be matching on a particular date. So there must be a statement just to explain this difference or to reconcile this difference, whether there are mistakes or not. So such a statement prepared by the business is called as the bank reconciliation statement. It can be prepared weekly, monthly, quarterly, depending on the number of bank transactions. Now this is a very important step to perform before finalizing annual accounts. So let's take a look at our bank book and the bank passbook. We see that the balances are not matching. So to travel from point A to point B, to reconcile, we have to copy or mimic or repeat what the bank has done. Just follow their footsteps. We are not making any changes in any of the books as of now. We are just preparing this BRS statement to bridge the gap, to check for accuracy and to explain this difference in balances. So we have to think like an accountant from the business point of view. We will write down the balance we have as per our bank book. That is a negative 1575. We generally write negative numbers in accounting in brackets instead of writing the minus sign, just for convenience and so that we can avoid any calculation mistakes. So we have to reach this balance 225, our point B, okay? But firstly, how do we read this bank book? Debit sides are deposits. All the amounts on the credit side will be our payments. And on this passbook, it is the opposite. Withdrawals are on the debit side and deposits are on the credit side. Have you ever wondered why that is so? When we deposit cash in bank becomes the receiver from our point of view. So we debit bank as we debit the receiver. But from bank's point of view, they are givers. So they credit our account. Credit the giver. Okay, so coming back, we've deposited cash 500. Bank to cash is the entry. This entry is there in both the books. Then we paid for wages 200. Again, we withdrew for drawings. Here our balance has gone in minus as we have used excess amount than what was already in the bank. This is called as an overdraft facility, where up to a certain limit an excess amount can be withdrawn from our account for a fee. So far we can see that entries are the same in both the books. Then on the 19th, there is an entry in the passbook that we got direct deposit from a third party for 1000, and this entry is not there in our bank book. It may be because we have not got any intimation from the bank, so we have not recorded it in the bank book. Now, since the balance in our passbook has increased, we should also add this amount 1000 in the statement. We are just copying them. The reason here is a direct deposit is not recorded in bank book. So we also have to state a reason in our BRS statement that we are preparing. On the 24th, there is again withdrawal of 675 to pay for purchases. This is again same in both the books. On 25th, payment is made to supplier Harry Traders by check. But this is not there anywhere on our passbook. So what could this mean? This means a check was issued to Harry Traders by us. That's why it's there in our bank book. But he may have still not presented the check in the bank. So the check is still not cleared. Well, this means the passbook balance has not been affected yet by this 600, but we have credited it in our bank book. So to cancel out this effect, we are going to add this in the statement. So the reason here is there was a check issued which was not presented for payment. Okay, can we proceed further? What is next? On 26th, the bank has charged us a fee and they deducted the amount directly. No intimation. So it is not there in our bank book. Now that we have checked the passbook, we know that the bank has reduced our balance by charging a fee. So we have to subtract this in our statement. Reason: bank charges not recorded in bank book. On 26th, the bank has directly deposited 250 as an interest on his fixed deposit. So again, after confirming with passbook, we know that the bank balance has increased. So we add this 250. Interest on fixed deposit credited in passbook, not recorded in bank book. Now we can see that we have arrived to our point B. Our balance is 225. So we have reached our desired point, which means our balances have been reconciled with the bank. So let's quickly revise the reasons that we have seen for mismatch and how it showed on our reconciliation statement. You can pause and take a look. But before proceeding, we will need to go back to all our books, journal and ledger and pass the necessary entries for which transactions took place and there was no intimation given. So with this, we have completed preparing the BRS statement and making the necessary changes. If you like this video, please give this a thumbs up. Please share your feedback in the comment section below and don't forget to hit that subscribe button.